Okay, we are back again, and hopefully this time around the video will not get corrupted. So, what we'll be dealing with right now is the post analysis, the post news release for AUT employment change, because I heard some of you saying that you are struggling with the graph, the news graph, not the technical one, the news graph. So I'll be touching on a lot of subject in this recording because yesterday's one was unfortunately corrupted. So I'll be mixing what I said yesterday with stuff I'll be adding on today. And on this recording, we might not go to the chart, especially for the employment change part, because remember, when we do our analysis, when we apply the strategy for the news, there's three components to it, which are the economic indicators, the graph, the investing graph, and also the technical or MetaTrader graph, the technical chart. So with the employment change, we won't be going to the technical graph, and you'll see why. And the other thing I'd also like to get clear is that in trading, there is no 100% guarantee. So you won't hear me use the word always, because it's not always the case. We deal with mostly and also usually. So we deal with events or with occurrences which happen a lot of times, but then it's not always all the time. So even with this strategy, it's not always the case. The results are not always the same. So which is also one of the reasons why we said we are taking our time testing it and seeing how it works under different conditions. So we cannot just say because we have recorded how it has responded to certain news event and news events, and it has responded positively, so it's working on those news events for that particular week, then we can say it's 100% working. No, it worked on the conditions for that week. So for the other week, you might find out that it's slightly different. So in order for us to get the longevity, if I may say, of the strategy, it needs to be tested for an extended period to also see that it has consistency in its win rate. But then, so far, those who understand how it goes, they can use it. So far, it's still confirming to how we've been doing things and how we've been knowing it to work. But then there'll be some times whereby it will be off. And then those times, that's where we'll give an update of where there's been a shift. So we won't change the strategy because it's not working. We'll just modify it to say no. When conditions are like this, or when the situation is like this is what you should usually do. Just like now, for now, you know that if because we have three components as mentioned before: the economic indicators, the investing graph, and also the technical graph, right? So if we have these three, and then you find out that they are not on the same page, each and everyone is giving a different story, or even if it's we could say they are on the same page, there's doubt or uncertainty. There's not that much confidence in the analysis. Then it's either you step away from that event, you let the event pass and not trade it, or you risk less, because now there's no confidence in your analysis. So it's either you let the event pass or you risk less if you continue to trade that event. That's one of the things that we do when the components of the strategy are not in agreement, or when confidence is not that much on the strategy. It's either you leave the event, you stay out of the event, or you risk less. So you see, these are some of the things, these are some of the modifications which we are talking about. Then there'll also be modifications which are part of the strategy itself, because you find out that there are some events which respond well to the economic indicators more than the graph and also the technical side. Then you find out that there are some events which respond well to the graph instead of the economic indicators and also the graph. Then there are some events which respond well to the technical chart instead of the graph and also the economic indicators. So usually the events are the interest rates. They are the ones which usually go with the technical setups rather than the economic indicators and also the graph. So it doesn't mean that you do not analyze the other components just because the event usually respects one or two components out of the three. No, you analyze them all, but then you know that your key focus is on this component. I hope it's making sense so far. So, and the other thing is that we have released, I think it's three or four videos whereby we tackled the different events also on different currencies. So for NFP it was USD, then employment change, I think it was CAD, then the interest rate, I think we also did the interest rate. So what I'm trying to say here is that we won't be doing each and every we won't be recording a video for each and every news event for each and every currency. So on our listed news, we have 4 major news which we are trading. They're soon about to be 3 because the retail sales are not that much moving. I'll get into that in a bit. But then, we still have 4. We say that it's interest rate, NFP, employment change, and also it's coupled with unemployment rate. Then we also have retail sales. So it's retail sales, employment change, NFP, and also interest rates. So they are 4. So for these 4 events, you'll find out that they occur on different currencies. Each and every currency has these events, obviously excluding NFP. NFP is for USD because NFP is basically the employment change for USD. They named it non-farm payrolls, which is why it's also released with the unemployment rate at the same time. So the employment changes go hand in hand with the unemployment rate. They are coupled together. So besides the NFP, NZD, GBP, Euro, CAD, they have their employment changes, they have their interest rates, they also have their retail sales. So once we say this is the strategy for employment change, this is what you do for employment change, and these are the factors which you look into. These are the economic indicators which you look into. This is how you analyze the graph, the technicals like that. It's for all the currencies. We won't do the currencies one by one. No, we'll just do a single event. Then just know that it applies to all the currencies. Also the interest rate and NFPs for USD as mentioned before, and the retail sales. Now let me also get into the retail sales. There's a reason besides the fact that I wasn't around when the retail sales were released, but then even if I was, I doubt that I would have made a pre-analysis video on this one because I think it's the only one missing because we already did the other 3 events. So with retail sales, the problem with retail sales is that it usually doesn't move. As you can see, it's a MOM event. It's a month-on-month event. So the the momentum or the power is not that much. But then sometimes they may surprise you, but then it's rare that you might find movement, which was the case this week on Tuesday, March the 16th, when the retail sales were released. There wasn't that much movement or volatility on the charts during the news release. So with retail sales, we mentioned some few factors which you should look into. The factors I'm referring to, the economic indicators. Okay, let me check if this is still recording. Okay, great. So I'm referring to the economic indicators. So even in these economic indicators, what you should know is that there will be that one or two economic indicators which highly correlate with the event which is being analyzed. So retail sales, we mentioned a number of economic indicators, and on that number CPI was included. And I also mentioned before that CPI has a very high correlation with retail sales. So the direction for CPI is usually the direction for retail sales. Please note something, I said usually. It's not always the case, but then in most cases, that's how they go. The direction for CPI is the direction for retail sales. Doesn't mean that we shouldn't consider other indicators in this scenario, but then just know that when you're doing analysis for retail sales, when you get to the economic indicators, CPI, the direction for CPI is most likely going to be the direction for retail sales because they are highly correlated. I hope this makes sense. Just like with USD, usually USD NFP, usually ADP, non-farm employment change, has a high correlation with non-farm payrolls. That's not always the case, as I mentioned. Usually, mostly. Please note this, so that you won't say, EMA gave us a strategy, now it's no longer. No. There will be times whereby, you know in trading. So we are done with retail sales. So that was one of the reasons why I say that we might no longer include it in the major events which we trade, because it's no longer moving. And just like as you can see, we have building permits here, crude oil inventories. We don't trade them, although they are high impact or they are listed as the triple events. We do not trade them because usually they do not move, and we do not want to entertain news which do not move, because news that do not move will blow an account due to the increased spread during, or hit your stop loss due to the increased spread during the news. But then since there's not much movement, you find out that it just spikes both sides, and that spike is not that great, but then it will take you out. And also due to the scorpion sting, those who are familiar with it, whereby you put the pending orders and also do market execution. So if the news are not moving, it might be costly. So we want news which usually give a solid direction, which will produce a very forward candle, if I may put it this way. So that's that for now. We will go to the employment change and deal with the components of the employment change just to solidify the strategy. We've already done a video on the employment change, which is why there wasn't any pre-analysis video for AUD employment change. This is just the post one. We're just doing this to give a follow-up, because the strategy and the rocketing for the employment change is already there. I think we did it with CARE. So it's already there. Now we're just solidifying the information, and also trying to assist, because there are some who have a problem with the graph. I'm also trying to assist them by doing this. So we start off with, okay, I also mentioned that I won't be going to the technical chart with this one. So we'll just be doing the economic indicators and also the investing.com graph. So we start off with the economic indicators for employment change. I think they are retail sales, GDP, CPI, interest rates. But then I had already searched them, so we'll just access them easily. Yeah, I think there are 4. So we start off with the retail sales. It's the one on top. Retail sales for AUD. The retail sales for AUD was a drop. The retail sales for AUD was a drop. It was negative. So even on the chart, you will see that this is a drop. Okay, it's saying no. Let me try to switch on the Wi-Fi. So even on the chart, as I was saying, even on the chart, there was a drop. So retail sales, AUD retail sales was negative. So we have 1 negative and 0 positives. We have 1 negative and 0 positive. Then okay, another retail sales. So it was also negative. So retail sales overall was a negative. Then we go to the GDP. And okay, it's still loading. The GDP, we found out that it was positive. The reading was positive. So the retail sales were negative, the GDP was positive. So it's 1 negative and 1 positive. Then we go to the CPI. CPI, we said, usually correlates with the direction for retail sales. So let's see. Like I said, not always the case, usually. So you see, it's positive. It's positive. So the indicators are 2 positive and 1 negative. Now back to this issue of correlation. What you'll see is that the graph did drop, just like on retail sales. The graph turned and went down, just like on retail sales. So the direction was the same, just that due to the forecast. Because remember, what usually drives the news is the actual in relation to the forecast. So you might find out that in this case, the actual, since it had beat the forecast, was positive, although there was a drop on the graph. So the drop was there, just like on the retail sales, just that the difference in the forecast was what caused the strength and difference meter to be like this, if I may say. But then, as you can see, there was a drop, but then the drop still was positive for CPI. So in this case, CPI was a buy, but then the retail sales was a sell. They were different. Hence, again, not always the case, usually. But then I hope you can see that even in this difference, there was some similarity in terms of the turning of the graph. So we were still at 2 positive and 1 negative, right? So lastly, we'll go to the interest rate decision for AUD. I think it was on the 2nd of March. We go to the interest rate decision, and it was held, obviously, but on the chart, on the technical chart, AUD bought. So we can also consider it, or we cannot consider it, but then either way, the positives are already leading. But then if we do consider it, since it bought on the technical chart, it will be considered as a positive. So if we include it, it will be 3 positives and 1 negative. But then if we do not include it, it's still positives to the good. So it's still 2 positives and 1 negative. So the positives are leading. So for this employment change, we're ruling out a positive on the economic indicators. The economic indicators say that AUD will be positive. AUD will be a buy due to 2 economic indicators being positive, or 3 if you include interest rate being positive and 1 being negative. So then we will go to the graph. Here, please disregard this movement, because we'll take it as if it had not yet occurred. because okay, let's do this. Yeah, we'll take it as if it had not occurred, because we were still dealing with this portion here. We're still dealing with this portion here. This one here came after the news was released. So if we were still on the pre-news analysis, then this portion here was not there. So we're dealing with this one. Then we deal with the graph now. We deal with the graph. With this graph, as we mentioned, we deal with the dots. I'm still going to explain how the dots relate with the forecast and everything, but then what's important here is the dots, because they are actually very simple to read. They are very simple to read. So according to our graph strategy, we said if we get at least 3, in some cases they can be 4 or 5, but then it's usually 3. Then 4, 5 is rare. But then after 3 dots in a certain direction, in a specific direction, then we expect the market to turn. Or after 4 dots in a specific direction, we expect the market to turn. They don't usually reach 5 dots. So what do we mean by this? What we mean is that in this case, if you can look, we have 1, okay, we have 1, 2, 3. And then from these 3 dots, you can find out that you'll see that the trend is down. They are falling. So the reading is falling, because these dots, they represent a reading, the news reading. So the readings are falling. So the trend here is a downward trend. So from this downward trend, we expect, especially after a sharp, I always mention that there will be a sharp rise or fall. So especially after a sharp move, we expect a correction or a reversal. So we have this fall here, then afterwards, after this one, we got a correction, as you can see. So it's 1, 2, 3, then the correction. So in some cases you might find that it might even go down to the 4th one before correcting. So the more dots there are in the trend, then the more chances of a correction. So if there are 4 dots in a specific trend, whether a downtrend or an uptrend, then you have more chances, or you have a more likelihood for the graph to turn as compared to when they are 3 or when they are 2. So when they are 4, there's a higher chance that it will turn as compared to when they are 3. What do I mean by this? As I mentioned before, so I'm going to emphasize on this so that those who do not understand, they get the picture. So I apologize if for some it might seem like I'm just rotating around the same point, or I'm repeating the same thing over and over and over. But then I'm just trying to help those who are not understanding what we mean when we say we are doing the graph analysis. So in this case, I'll do it again. We have 1, 2, 3 dots, then a correction or reversal. Let me just call it a reversal. Let's for the sake of this, it's a correction and also a reversal, but then let's just stick to reversal. Let's stick to the term of reversal. So it's 1, 2, 3, then a reversal, as you can see. Even when going up, because when we start going up, this was the 3rd point, right? When going down, this was number 3, because we had 1 and 2 here. We had 1 and 2, and this was number 3. Now that we are going up, now that we're going up, let me try to think. I might find the colors here. Yeah, let me just use this one. So now that we are going up, right? Okay, it's not that. Let me use this one. Yeah. Now that we are going up, yeah, this one is better. Now that we are going up, right? So the third one in this case becomes the first one. This now becomes dot number 1. Then this one becomes dot number 2. Then this one becomes number 3. Then as you can see, you got a reversal. Again, now that we're going up, this one becomes 1, 2, and 3. 1, 2, and 3. Then you got your turn. So the same thing happens, but then this time around it's 4. This time around they are 4. So this time around, since that one was 3, it now becomes the new one for this down trend. 1, 2, 3, 4, reversal. So as we said before, the higher the number of dots, the more chances for a reversal. But then usually it reverses after 3 or 4 dots. It's either 3 or 4. The fifth one usually you won't get it. but then if you get the fifth dot that you know, then you know that there's a very, very high chance of a reversal. I'll also explain what the reversal means, because it's related to the forecast. So for now, understand how this chart is moving. You need to understand how this chart is moving. 1, 2, 3, 4, we got a reversal. Then from there, it was just 1, 2, then it reversed, you see. So it didn't go to the third or fourth dot, it just reversed after the second one. Then again, we got this one. 1, 2, 3, 4. You see, so we were expecting a reversal from this fourth one. We're expecting a reversal from this fourth one. We have 1, 2, 3. Okay, no. 1, 2, 3, and 4. Then we got the what? The reversal. Easy, simple, just like that. 1, 2, 3, 4. Then we got the reversal. So from this one, we were already expecting this reversal to occur, because we had a downtrend. We were in a downtrend, and then it was a consecutive one. They were falling consecutively. That's why we are counting them in that order of 1, 2, 3, 4. We did not. If one of the dots had been higher than the previous one, then we'd start the count, just like in this case. If you look at this right now, it's 1, 2, 3, 4. Then it went higher than this one, than the previous one. If it drops again and goes here, we will not say 1, 1, 2, 3, 4, then say this is the fifth one. No. The moment this one was higher than this one, then the trend was restarted. The count was also restarted. So if it goes down, if it drops somewhere there, then we will say it's number 2, because this will be the new number 1. Let me do this. If we get a drop up until somewhere there, it will be the second one, because now this one is considered as the first one. I hope it's clear. So we were expecting this reversal from the fourth point, and we were not expecting a strong one. Why? Because as you can see, the trend here going down, when the readings were going down, when the dots were going down, they weren't going down aggressively. They were just going down smoothly, if I may say. the decline here was a smooth one. It was a smooth decline, unlike this one, which was very aggressive. So we expect the turn to be aggressive as well. So with this one, they went down normally or smoothly. So even the reversal, we expect it to be a nice one. So we were expecting a reversal from that point. So the graph was saying what? It was giving us a buy, because before this part was formed. Because when you're doing analysis, you won't see this part. You'll only see the 1, 2, 3, 4 dots. So from this fourth one, we were expecting it to turn, just like the one with CAD employment change. The one with CAD employment change, go to the CAD employment change pre or before news video, then you will see how we dealt with it. We also drew the arrow and said we were expecting it to turn and rise. So these charts are almost similar. Also consider the fact that they are the CDCs, the commodity dependent currencies, AUD and ZD, and also CAD. That's why the movement is also highly correlated. So even the charts, sometimes the graph, is also correlated. So what does the reversal mean in terms of the forecast? Because we cannot just say that since we say now that it's going to reverse to the upside, because remember it was the downtrend. Now if we say we're expecting a reversal, it means it will go up, right? So that's why we say AUD is more likely to buy, because it will go up. So if it was in this case, whereby it's 1, 2, 3, and we expect it to go down, we'd have said we expect AUD to sell, because we expect the reversal to be on the downside. We expect the reversal to go down. The reversal is in the downward direction. So we'd have said we expect AUD to go down, meaning it's a sell for AUD. So in this case, we expect it to go up, meaning we expect a buy on AUD, which is also confirming that buy from the positive readings on the from the positives outweighing the negatives on the economic indicators. Because remember, the economic indicators, we said 3 are positive and 1 is negative, or we can say 2 are positive. If we exclude the interest rate, we say 2 are positive, then 1 is negative. But then if we include the rates, let's just include the rates, we'll just say 3 are positive, then 1 is negative. So the positives are leading. Economic indicators said AUD will be positive, meaning it's a buy on AUD something. This something represents any currency which is paired against AUD. So it will buy. We say it's a buy for this one according to the economic indicators. They say it's this. Then the graph is also saying, it's also giving us the same story, because it turned up, or we expect it to turn to the upside or reverse to the upside. Then that means it's usually a buy for AUD. Then that's where the forecast comes in. And for this one, you'll have to revisit the beginner lessons on the investing.com app, how to understand how the actual reading interacts with the forecast, or the Archinus cons or consensus, and also the previous, how they affect each other. There was a full lesson there which explains the details very well. So for this one, we'll be looking at the forecast. And also the strength of the turn, as I mentioned. So the forecast for these news was 30k. Ignore this one, because at this moment we take it as it hadn't been released yet, although it was released, but then we'll take it as it wasn't yet released, because in the case of this one, we said we'll also take it as if it wasn't there. So when we look at the strength of the 10, we say it shouldn't be that much, but then since it's after the fourth dot, then it should be visible. So we do not expect the 10 to be somewhere close around there. No, we expect it to be somewhere around here. No, not there. Somewhere around, yeah, somewhere around there, and above, because it's after the fourth dot on the downside. But then at the same time, we do not expect it to be too high, because as we mentioned before, the fall or the decline was not that aggressive. So even the reversal shouldn't be aggressive, but then at the same time, it shouldn't be too weak. It should just be in the middle, which is what we got there, and that's how it was able to beat the forecast. The forecast. So AUD employment change was also positive, as you can see, and even on the chart it was positive. So the strategy was still being respected. And now we'll go to the other thing before I forget. I mentioned on the mentorship group, for those who used pending orders, I say take partial profits or close or apply any form of profit management which is proper, and the manual entries we shouldn't go in. There's a reason for that for USD, because our levels had been reached and also breached, but then I wasn't that much comfortable with the entries, because I know from experience, I've been trading these news for many years now, so I know that usually when the news move, the USD news move and have high momentum behind the candle, the following day or in the hours to come, the market will go in the opposite direction. So with yesterday's news, USD bought, right? So which was what we wanted technically. No, it sold. Sorry, USD sold. USD was weak, which was what we wanted technically. We wanted a weak USD. But then when they had reached our levels, then the momentum was still there. Then they even crossed the levels with that momentum. So afterwards, there might be a push, but then it won't be long term, because if you saw those candles, they were big. So okay, let's just go to the chart and see. So this is the instance, one of the instances whereby we'll be going to the charts. So let me just go with USDJPY. Yeah, let me go with USDJPY. If you check the candle for, the news, okay, no, not this one. It's around 8. Yeah, it was this one, I think. Okay, the time settings, let me check. I think it's now GMT plus 3. Okay, yeah, they are now using GMT plus 3, so we are an hour behind. As you can see, now the candle is for 2:15, and right now it's 1:15. It's 1:15. It's 1:26 there, but then the candle which has just opened right now, it's for 1:15. But then if you check at the bottom there, it's saying 2:15, meaning the time for the broker or the server on this platform is ahead of us with 1 hour. So we are 1 hour behind. So since the news were at 8, so it means that here on the server it will be 9. So the candle for the news is this one. So after that large sell, there was a sell, but then the following day, as you can see, the market reversed. So even on gold, as you can see, there was a buy, then the market reversed. Euro USD, buy, market reversed. AUD USD, buy, market reversed. So if we had tried to enter, it wouldn't be for long. We wouldn't have held like we would have wanted. NZD buy, market reversed. USD CAD sell, market reversed. So it's like that. Just that recently I would look for a proper example to substantiate what I'm talking about, but then just that recently the news haven't been moving due to the pandemic, so there's no proper date which I can look for and show you what I'm talking about. So let's just go to, maybe we'll just be lucky enough to find, no, not the statement, to find a date which the candle was there, which showed movement. So I'll be focusing on these dates right here. I'll be focusing on those dates there. Okay, let's check if we're still recording-ish. Don't want yesterday's story, especially after talking for so long. So the 17th of March, it was this week. No, then let's look for 27th January. Let's go to the chart and 27th January, maybe. Okay, but then I don't remember the news moving on the 27th of January. On the 27th of January. The candle around 9. You see, it wasn't that strong. So it's not showing what I am trying to prove, because we want a strong candle. As I said, if there is strong or high momentum behind the candle, after a few hours or after a day or two, the market will reverse. But in this one, there was no momentum. There wasn't any movement. So let's look for another date. December 16th. Hopefully it is. But I think it moved. I think the news for the 16th of December last year, I remember them moving a bit. So December 16th. December 16th. Yeah, December 16th. So it's somewhere 17th, the 16th. Yeah, okay. So at 9, you see, there's the candle. As you can see, this one moved. Yeah, these news moved, but then they closed in a rejection. So you see what I was talking about. So during the news release, they picked a direction, but then the following hours, the market reversed. Let me try to go to the 15-minute chart. Scroll back to December 16th. Okay, it's still loading. But then I hope you got what I was trying to show you. I hope you got what I was trying. Oh no, is it still okay? December 16th. If it doesn't load, then we'll be in trouble. So it's taking its time to access the data from the previous dates. but then we're close. Yeah, while I'm still scrolling like this, it's like this, it's like that. The If the news move very much, the interest rate news for USD, if they move very much, then expect a correction or reversal, and following days or no ways, just a day from the day we wanted, because now it's December 17th, so we wanted the 16th, but then it's not showing. Yeah, but then on the H1 time frame, it's there, as I pointed out before. Here it is. Here it is on the H1. There was movement behind this candle, then the correction. It's similar to the ones from Wednesday. You see, there was movement, then the correction, and as you saw with the ones with the news from the 27th of January, there wasn't any movement, any major movement. There wasn't any momentum, hence we didn't get a correction. The trend continued, and also I think the correction is also brought up, or it's also given when the technical analysis also allows for a correction. I shouldn't just say because the news moved with a high momentum, then sometimes they do continue. Please note, not always. Just because I say that the news after high momentum, then we expect a correction the following hour or days, then it's always the case. No, it's not always the case. Certain conditions will have to be met. So in this case, as you can see, support was being tested here. Support was being tested here, and also you can also spot divergence, bullish divergence here with the 3 touches to the low. So I think the reversal here, or the correction here, was imminent. So I won't get into much technical analysis because this is for fundamental. This is a fundamental update. But then, yeah, on the technical side, you can also see that the spikes which were thrown there, they were signaling a reversal, which later occurred. It's also in support of the cycle, because what I just explained is some sort of a psychological move that usually after high momentum on USD news, then you will get a correction, some sort of a correction in the hours or days to come. It's not always the case, but then this is what usually happens, and I've got proof. Just that as you can see, this MetaTrader doesn't allow me to scroll far back using smaller time frames, and we need the small time frames to be able to see the movement, because if we go to H4, then the candles are almost similar, so it becomes a bit difficult to spot out to precisely spot out the candle for the news. So we needed at least H1 or M15, and as you can see, they have limited traveling distance to the past. Then yeah, I think that's all. I think we have covered what we wanted. We have touched the retail sales. We have also mentioned that there are some news releases which respect technicals more than the economic indicators and the graph. There are some which respect the graph more than the technical and also the economic indicators. There are some which respect the economic indicators more than the technical and also the graph. Hopefully you have made it so far without me boring you with my long lesson, but then eventually these things are worth it. There's money in this extended conversations that we're having right now. It's profits. I'm speaking pips. I'm speaking profits. So yeah, for now that's all. And as I mentioned before, we won't be doing this on all events, because unless if we notice that there's been a very significant change to how the strategy is reacting towards a particular event, we'll look at the conditions which the strategy was trading in, then also give a reason why the strategy might have failed in that case. So for now, it's still working well, and hopefully it continues to work well like this. If there's error, may it be marginal, small, not that big, then yeah, that's all. That's all for now. So even the retail sales for AUD which are about to come, we might search, but then the CPI, it's been long overdue, because this is the QQ. The CPI was released in January, so the retail sales for this CPI, the retail sales usually follows the CPI. You might find out that the retail sales, these ones for January, it's for February or March. So the ones which are coming, they're also preliminary, so they might not have movement, and we do not exactly have the CPI for them, but then they might sell. Let me not get into them. What we wanted here, we are done. Yeah, we'll meet again.